Already bigger than many sovereign currencies, Bitcoin has broken the $1 billion in value mark this week. In the wake of continuing economic crises and liquidity shortages, this new virtual currency is poised to challenge euro and US dollar. By not being tied to any particular financial institution and independent from world governments, Bitcoin will become the safe haven for anyone trying to save their money from the crippled international banking system, claimed Max Keiser, the host of Roots Keiser Report. It is inevitable that Bitcoin will become a multi-trillion-dollar enterprise because every other currency in the world is tied to dying central banks that are encumbered with impossible-to-pay debts and bankrupt counterparty risks, Keiser said. Cryptocurrency Bitcoin emerged in 2009 amid the global financial meltdown. The digital currency was created by someone who identified himself as Satoshi Nakamoto. It is based on open-source software, and uses peer-to-peer connections for monetary transactions to avoid centralized authorities. Bitcoin aims to provide safe and secure exchange by verifying transactions with encryption that is used in military and government applications. And unlike bank services, the Bitcoin network is free, except for a voluntary to speed up transaction processing. Issuance of the currency is completely automated, with 25 new Bitcoins generated every 10 minutes. Inflation is said to be halved every 4 years, until the total of 21 million Bitcoins is reached. In theory, the currency would not lose its purchasing power unless individuals and businesses refused to use Bitcoins. With numerous financial companies already exchanging Bitcoins into any of the world's currencies, the founder of the Swedish Pirate Party, crippled, estimated that Bitcoin could capture between 1 and 10% of the global foreign exchange market. This implies that the price of each and every Bitcoin would rise to between $100,000 and $1 million, Max Keiser explained. "I have stated that myself," Keiser said. "I think Bitcoin's price will reach $200,000 per Bitcoin before Warren Buffett's Berkshire Hathaway's stock." 10 years ago, few predicted that Facebook would have more than 1 billion users worldwide. By the same token, few today imagined Bitcoin could take on the G20 nations, but Keiser believes this may soon take place. Bitcoin's valuation, already bigger than many sovereign currencies, will challenge the most traded currencies today, including the US dollar, the euro, the yen and the renminbi. Regulatory hand reaches out because the virtual currency bypasses authorities and cannot be taxed unless the person deliberately reveals his transactions. The U.S. government and the Treasury Department are seeking to enact stricter regulations and new money laundering rules. It is difficult to predict this new policy would play out, Patrick Merck, the legal counsel for the Bitcoin Foundation, a trade group promoting industry standards, said the framework would be infeasible for many, if not most, members of the Bitcoin community to comply with. Keiser believes that Bitcoin users and the currency itself have little to worry about, unlike most of Internet startups feeling themselves suddenly vulnerable to government oversight. Bitcoins are not issued by a central body, and rely on a network of verification nodes to regulate transactions. In the future, Bitcoin users may achieve enough political clout to defend itself in traditional arenas. As Bitcoin's price increases, the new Bitcoin millionaires and billionaires will use their economic clout to rewrite laws in favor of Bitcoin, the same way banks like JP Morgan or Goldman Sachs lobby government to write laws that favor them, he explained. Bitcoin could also offer relief to debt-stricken countries such as Cyprus. Cyprus was Bitcoin's come-to-Jesus moment, and it's fitting it happened around the Easter holidays, Keiser said. For millions of people around the world who have been victimized by banksters and their corrupt politician friends, the light bulb went off and they suddenly realized they could save their wealth by parking it in Bitcoin, and no government or bankster could stop them. After the initial rush of interest in the Internet in the mid-1990s, and the follow-up boom of Web 2.0 and the growth of social networking, Bitcoin is the third and perhaps the most disruptive wave of all, Keiser said. "This is Web 3.0, he said. "For me it's extremely exciting since I pioneered the idea of virtual currencies back in the mid-1990s and have 4 U.S. patents in my name covering virtual trading and virtual currencies. Most people I talked to back then about these ideas and the possibility that something like Bitcoin could exist didn't think it was possible. They were wrong.